The stock market absolutely loves revenue growth right now. It's infatuated with it. And one of the biggest revenue growers right now in the restaurant game on public stocks is Cava. Let's take a look at the stock chart. And as you can see, this stock has absolutely ripped from $40 a year ago to now $150. Let's take a look at the numbers and look at whether Cava deserves this valuation. So we're going back in time here and looking at not Cava, but Chipotle, 2007 through 2010. And I want to take a look at the revenue, about $1 billion to about $1.8 billion. This is exactly where Cava is in its growth story right now. And I want to compare that to its enterprise value on a price to sales basis. Not the greatest valuation metric, but a decent one for a growing company. And take a look at it. In 2007, you've got a 4.6 price to sales. Obviously, there's a crisis in 08 and 09. Stocks were really cheap. But take a look at 2010 when things got going again. You've got about a 3x price to sales for Chipotle for one of the best growing companies in the restaurant world. Let's take a look at what's going on at Cava. So remember back in 07, they were doing about $1 billion in revenue. It was trading between 2 and 3 times revenue, essentially Chipotle. Well, Cava's doing about $1 billion in revenue, but the enterprise value is massive. $17 billion. This thing is trading at 17 times revenue. That is a multiple that is usually held for a high growing tech stock with massive margins, not a restaurant with 6, 7, 8% margins essentially at net income. That is a massive multiple that it is probably never going to grow into, or if it does, it may take a decade to grow into. Think about what would happen to this stock if the long-term price to revenue is about the same as Chipotle at 4x. You would need to get to $4 billion in revenue. It is not going to see that number for maybe a decade, essentially. So you are buying so much growth when you pay $150 for this stock right here. Anything goes wrong in this model and you are going to be in big trouble as a shareholder. Let's take a look at Chipotle back in the day as well. So here's some longer term metrics for Chipotle once it's sort of, the growth is sort of slowed down just a little bit. And you can see right here, it trades at about 5x revenue here and about 5x revenue here, right? Compare that to Cava's 17x revenue essentially. And oh goodness, if you are going to 1/3 the valuation, you really better grow into that multiple. And look at, they're doing $5 billion in revenue. Cava is probably not going to do $5 billion in revenue. It may be a long, long time, maybe 20 years, but at its current growth structure, it's probably still not going to get there for about 15 or 16 years. You are paying for so much growth when you buy Cava at $150. We are not in this stock. We would want a multiple way, way lower than this. Buyer beware on Cava. Thanks for all the feedback you guys give us on social media. We really appreciate it. If there's anything you want to see or you want to reach out to talk stocks, we're here for you. We appreciate it. Thanks so much.